Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, June the 11th, 2014, and this is the daily report for gold and silver. Although nominally higher to unchanged on the day, we do have the precious metals trading a little bit firmer on the day. First to gold, current print on the screen is 1260.73. The high on the day is 1266.20 with a low of 1257.90, currently trading up roughly $1. Silver is trading in essence unchanged. You can see this on that daily chart. We have that doji. It's a pure doji because we are currently trading at 1918. That was the close of yesterday. The low 1908, the high 1944. You can see that high here. More on silver towards the end of the show. I want to start today's show by taking a look at our daily chart. And on our daily chart, both in gold and silver, I've put up moving average, simple moving averages. These are 14 days in terms of length. And as you can see, we are right at that 14-day moving average. So the recent climbs that we have seen have actually taken us up. And in the case of gold, to the 14-day moving average. In the case of silver, we are trading above the 14-day average. We'll talk about that, as I said, towards the end of the show. Now, we do have the market, of course, trading nominally higher, about $1 higher. And the one thing that we can say about this particular market is whenever we see a market ascend, it can ascend in a couple of different ways. Of course, the most feverish way it can ascend is really what we call parabolic, where it almost goes straight up. Aside from that, we will typically get some sort of a stair step in which we'll see the market rise, retrace a little bit, rise, and then retrace a little bit, and it will stair step up. That's another way that we can see the market ascend. Now, a third way, and the way that we're witnessing it in this particular case, is one in which the characteristics of the uptrend is really where the market trades up a little bit, sideways or consolidates, and then up a little bit, sideways or consolidates, up a little bit. And that, I believe, is precisely what we're seeing. Market comes down, it forms its base. We get these two dojis really in the center. We get that very nice rise. This, I believe, was Thursday of last week, in which the market traded up about $10. Then Friday and Monday, meaning Friday of last week and 2 days ago, we got the market pretty much trading sideways. You can see that. And then we get a nice ascent. Again, today, we've got that sideways activity. Now, it's slightly higher, but nonetheless, it is sideways. If we are to continue in that way, we should see the market consolidate and then, of course, clip a little bit higher. Now, we have identified resistance in a couple of different points. One of those points is 1263, and the other one is, I believe, 1283 to 1285. We'll look at that on a weekly chart, and we'll do that next. But before we do that, I want to take a look at the Japanese average charts on our daily charts. And I've done just that. Now, as you can see, this is where you really see some pretty huge differences between a Japanese average chart and a standard candlestick chart, which represents our true opens and closes. This, of course, is comparing it to the midpoint of the prior day. So that even on a day in which it's slightly higher to unchanged, trading roughly now, 1261, as I said, up about $1, $1.50 right now, you can see that the body size on the Japanese average chart has absolutely grown, one. And then two, the other thing that we're noticing is that we have the absence of the lower wick, and that's something that we really want to see. And what that tells us is that the trend itself, because the body size is increasing a little bit, the absence of lower tail, that even with an unchanged day, we don't see a waning or a weakening of this current uptrend. If anything, it's staying the same and it's about stable. Now, we're not getting tremendous body size as we might in a rise such as we saw here, in which you can see these body sizes are really pretty large when you compare them to the average body size in the chart. Now, when we compare this particular body size, it's certainly much smaller than what we saw in this downtrend, and it's certainly much greater than when we saw the sideways market. But nonetheless, you can see the dramatic difference between a Japanese average and a candlestick chart, especially in a scenario where the market is only slightly higher. Again, compare the chart we just had up to when I convert it, and of course I have just converted it back to a standard candlestick chart. You can see they look dramatically different. Now, the next chart that we do want to look at today is our weekly chart. This, of course, is in standard candlestick format. We've talked about the fact that we have identified a potential candlestick pattern forming, and that candlestick pattern that we're looking at really is a three-river morning star. Now, as I've said, typically what you want on a three-river morning star, let me try to put this in as best I can, and this, of course, is for illustration purposes only, but you would like to see this green candle on our weekly chart be a large green candle. So you would have your red candle, your star gapped in the center, and a large green candle. You can see I've drawn this green candle up to what, about 1275, 1278. And that, to me, would be absolutely indicative of a really good key reversal. We talked about the fact the other day that we also saw a variation of the three-river morning star right in here, which was our $200 rally, in which at the end of last year, beginning of this year, we saw the market climb from that double bottom at 1181 up to almost 1400. 1391 was the actual top of the market. So when we look at this candle, you can see it's still forming. It is Wednesday. We've got a couple of more days, of course, Thursday and Friday, for this candle to complete itself. But we certainly could see this market continue to rise up. But prior to doing that, you can also see that we absolutely have a little bit of resistance, a little bit of a headwind right in here. And that headwind is coming in at a 61% fib retracement, and that is 1263. Also, as I said on yesterday's show, it's my current belief that we should make it above this. We should have the market dramatically move above that. You can also see a couple of tops right in here kind of matching to that, and that's just prior to the market kind of shooting up. So I would expect that if we do see the market break above it, we could see a spurt, but I also believe that that spurt, if we do get it, could culminate somewhere around, call it 1283 to about 1287, 1288. That would be based on this 50% retracement of the same Fibonacci sequence. Lastly, we are looking at a 9-day chart. When we look at the 9-day chart, you can see that the moving average is still quite a way, because we've got a 14 period moving average periods of 9 days here, so it's going to be dramatically higher. When we look at this and look for any kind of candlestick pattern, really all we can see is maybe the beginning of a piercing line pattern. It's right now an on neck pattern. But nonetheless, we do see some very, very good support down in this area where these lows were hit. And then lastly, I do want to look at silver. The one interesting thing right now about silver, this is a daily chart. And again, we've got a 14-day moving average. That's this red line going through it. 14-day moving average right now at 1904. Current print 1919, 1918. It is ticking up a cent to 2 cents. Between that and unchanged, as you can see, as we go into the end of the afternoon session on Wednesday. And nonetheless, we have a nice climb in the market. We've identified a level of support in the market. Let's go ahead and compress this one more time so that we can hold a lot of data in there. And when we do that, we've talked about this a little bit last week and at the beginning of this week. You can, without a question of a doubt, that this big red, the big blue line that's in there is simply a horizontal line that I placed at the lows of this recent decline as silver came down off of $20 down to 1880. That's where we're currently pegging support. We can see that as resistance right in here, and it's resistance really before the first leg of a real parabolic rise. This rise right here is absolutely a parabolic rise, and from there a slow demise back down. But as it does come down, we can see we had supportive action right in here. Market comes back up, trades back down. Once again, it becomes support. And it's been support pretty much for the better part of this year, 2014, starting right here. And that's the one thing that I see in terms of boding well for any kind of a bullish camp, is that we do have good support for silver on a technical basis, 1880 and above, currently trading above 1900, not by very much, but above it nonetheless. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.